rather than talking about preserving wealth and asset protection and all that kind of stuff, how about if I can talk to you guys for about an hour and 20 minutes, something like that, about how to not pay as much money to Uncle Sam's. Anybody interested in that one? Okay? Because that's what we're going to do. I need to give you a little bit of background on who I am, why I'm here, how this whole thing kind of developed before we really get started into it. And the primary objective here is for me to teach you how to do what I do. Because if I'm from the Seattle area. Is anybody else from the Pacific Northwest? Wow, that's good. Some of you are. For those of you that aren't from the Pacific Northwest, we don't tan, we rust. That's the weather report up there. It rains a lot. But what I'm going to do is I'm going to show you copies of some of my tax returns. I'm going to show you exactly what it is that I do, and then I'm going to teach you how to do the same thing. I did not fly down here to talk to you guys about theory. And this is not about theory, it's about reality, okay? And that's one of the reasons I'm going to show you copies of my tax returns. So here's what we're going to do. I'm going to give you a little bit of background on who I am, why I'm here. I'm going to show you copies of a couple of my tax returns. Okay? And then I'm going to teach you how to do what I've done. When I'm done showing you copies of my tax returns, I'm going to give you an opportunity to leave. All right? Because if you're not interested in what my tax returns show, there's not anything in it for you, because that's what I'm going to teach you. Right? So is that fair enough to everybody? And then when I'm done talking, you guys can all go out to dinner. How does that sound? So, make a long story short, I started investing probably back in 1997, 1998, something like that. And what happened, I was a school teacher and I taught 6th grade. And I was making about $2,000 a month. And I had exactly $2,000 a month worth of bills. Funny how that works, huh? And so at the end of the month, I would run out of month, hopefully about the same time I'd run out of money, and I'd get my next paycheck. And that was my life. I was 37 years old, sick and tired of being sick and tired of being sick and tired. And I had something that I don't know if any of you guys have ever had. It's called financial stress. You ever had that one? And so I'll never forget, it was a Friday night. It was about midnight. And I'm laying in bed having a tough time sleeping. So I get up, go downstairs, turn on the TV, and I start doing the channel surfing thing. Midnight on a Friday night. And I came across this show where there was some guy sitting in a chair, okay, on the beach in Hawaii. And there was a Rolls Royce in the background, and the palm trees were over here swaying in the breeze, and he had a big pineapple with a straw sticking out of it, sitting in his chair, sucking on this pineapple, talking about how you can make $1 billion in real estate. You guys ever seen that TV show? Okay? And they kept talking about, oh yeah, you can make a lot of money in real estate. They not once did they tell you how. All they did is they kept flashing this phone number on the screen and saying, call in with your Visa card. And then what they would do is they would have other people come on with testimonials. Well, yeah, I was a student and I made $400 million on my first real estate deal. You know? Never do they tell you how. Halfway through that show, I fell asleep. The next morning, Saturday morning, I woke up, and I don't know what happened overnight, you guys. I must have had like dreams about it or something. I woke up on Saturday morning, and I was a fired up mama jama dude about real estate. I'm going to make millions of dollars in real estate. I just dreamt about it all night. And so what I did, this was back in 1998, before Al Gore invented the internet. And so I jumped in my car, and I drove to the local 7-Eleven, and I bought a newspaper. And I started looking at all these houses for sale. And so I went through this, and I finally found some that I wanted to go look at. And I must have put 200 miles on my car that weekend, something like that. And I finally found a house that I wanted to buy as an investment property. And it was absolutely the perfect property. So what I did is, and that took all weekend. So come Monday morning, I drive to work. I'm teaching 6th grade. 3:15 in the afternoon, I tell all the little 6th grade kids, go home, go bug your parents. And so I jump in my car, I drive to the bank. When I get to the bank, I go in, say, yeah, my name is Patrick James. You guys have the mortgage on my house that I'm living in now. And I want to buy an investment property, and can I borrow the money? They looked at me and said, can we see a copy of your driver's license and what's your social security number? So I gave it to them. And then they left. They went into their little secret room. You know what I'm talking about? They do that. Car dealerships do the same thing. They take your driver's license and they leave. So you can't leave. It's the screwiest thing. And they went in their little secret room for about 25 minutes. In 25 minutes, they come back out of their little secret room and they say, Mr. James, you have a really good credit score. How much money would you like to borrow? You guys, of course I had a good credit score. I've never missed a payment in my life. Do you want to know why I've never missed a payment in my life? Because I was making $2,000 a month as a school teacher. I had $2,000 a month worth of bills, and it worked out just perfect. And I've never missed a payment. I had 2 credit cards, but I never used them because I didn't have enough money to make the minimum payment if I used them. So I never missed a payment. And I had great credit. And so I go into this bank and they say, you have really good credit. How much money would you like to borrow? And I told them how much the house was and everything. And the screwiest thing is they loaned me the money. Not once did they ask, well, how are you going to pay it back? They never asked me that. You know that whole banking crisis that we've been involved in and all that kind of stuff? I started it. That's what happened. So anyway, I'm all excited, right? I'm getting an investment property. I'm investing in real estate. And I'm 37 years old. Life is good until I closed on the deal. Because now I have a vacant house that has a house payment in 30 days, and I have absolutely no possible way of making that house payment. You guys with me on that? I don't recommend doing it that way. That's not the way to do it. And now I'm thinking, man, I wish I didn't fall asleep halfway through that show. I wish I knew what the ending was, but I didn't know. And then, and to make a long story short, I ended up putting an ad in the paper, for sale by owner, lease option. And down below that in big, bold, black letters, I wrote the word hurry. But that was more for me than anybody else. And lo and behold, the day before that house payment was due, a young kid, just graduated from college, came into my life. His name's Earl Brightson. And Earl, the day before that house payment was due, called me on the phone. Yeah, I saw your ad in the newspaper, and I'm kind of new to the area. I just got a job working in Seattle, and I need a place to live. I said, boy, we got the place for you. And so I met him at the house, and the night before the house payment was due, I leased it to him. I collected the down payment and the deposit and everything, and I made the house payment. And that's how I got started. Why do I tell you that story? Not because that's how you do real estate. That's not how you do real estate. I tell you that story because you never know who's going to come into your life. You just don't know. And the truth of the matter is, it's not what you know, it's who you know that makes the difference. It's not what you know, it's who you know that makes the difference. How many people agree with me on that? Yeah, there's no question about it. The more I surround myself with successful people that are more successful than myself, guess what happens to me? Whoop. It rises, it builds you up, it brings you up. No question about it. So, it's not what you know, it's who you know. Earl Brightson got into the house. He thought he became my best friend. He's not my best friend, but he thought he was my best friend. He actually got a job working for a company in Seattle called Stock Market Institute of Learning. It was a seminar company. Never been to a seminar before in my life. And Earl keeps calling me on the phone and bugging me. Pat, do you want to go to a seminar to learn how to invest money in the stock market? I said, Earl, no, I really don't, because I don't even know if Dow Jones is a real person. I still don't know. And so he kept calling me and calling me and calling me. And on a Wednesday, I'll never forget, it was a Wednesday, he called me on the phone. He said, Pat, this Friday night at 6 o'clock at the DoubleTree Hotel in Seattle, we're doing one of these stock market seminars. Do you want to come? I can get you in for free. You guys, everybody got in for free. It was one of those freebie ones. He said, I can get you in for free. And I said, Earl, I'm not interested in the stock market. I already told you that. Thanks, but no thanks. Goodbye. Thursday, the next day, he calls me one more time. Pat, are you sure you don't want to go? I can still get you in for free. I said, Earl, listen, I'm not your best friend. I have no interest in the stock market. I want you to make your house payment on time because then I can make my mortgage payment and you can keep living there. Okay? That's the end of the relationship. Thank you. Goodbye. I cannot tell you how many times, folks, I have laid in bed at night, staring at the ceiling, wondering, what if? What if? You see, what if Earl had not called me back one more time the next day on Friday? Because he did. He said, Pat, it's tonight, it's 6 o'clock. Okay, I'm gonna go into negotiation mode now. I said, Earl, I'll tell you what. If I go to this seminar on the stock market or whatever it is you're talking about, okay, if I go to this, you have to quit bugging me. Is it a deal? He said, deal. So I hung up. And at 6 o'clock that Friday night, you guys, at exactly 6 o'clock, I showed up to the DoubleTree Hotel in Seattle, Washington, came in the back door back there. There were 250 people in the room. I sat in the very back row in the corner back there. Had my arms folded like this and one eye closed. Never been to a seminar before, but it was kind of an interesting experience. Because as soon as I walked in, there was this whole back table set up. And you know what I saw? A whole bunch of credit card machines. Okay? I don't know if you guys ever had that or not. And so I walked in, and my whole game plan was going to be do the token hit and run. The 15-minute hit and run, show up for 15 minutes, and then just slide out the back door. Hey, I showed up. Earl can't bug me anymore. Within the first 15 minutes, the speaker that was up on stage said this: did you know that you can buy a stock for $10 a share, and it can go to 15 or it can go to 8, and you make a profit either way? And I'm sitting back there in the corner going, say what? What's that, new math? That does not make any sense. And so I raised my hand. And I said, can you repeat that? And he said, yeah, you can buy a stock, and it doesn't matter if the price goes up or the price goes down. You make a profit either way. How many people in here right now know what I'm talking about? Raise your hand. Look around, you guys. I'm not making this up. You guys must all be students of Joey's. Yeah. Joey's an amazing guy. He's helped me a lot. He's mentored me with stock market trading also. But anyway, so I sat there for 3 hours. I sat there the whole entire seminar. At the end of this 3-hour seminar, the speaker that was up here, tell me if this even remotely sounds familiar. For only $4,000, you too can be a millionaire. Get out your credit cards and go to the back table. You ever heard that one? So I'm sitting there thinking, I don't have $4,000. I'm 37 years old. I have $1,500 in my lifetime savings. Took me 37 years to accumulate it. Okay? And they want $4,000 to go to a seminar to learn how to invest money in the stock market to do what they just said? And in the back of my head, I'm thinking, man, I wish I had $4,000. But I didn't have it. But you know what I had? And this is the problem. I had 2 credit cards that I've never used because I never had enough money to even make the minimum payment. And they both had a $2,000 credit limit on them. So now I got the dilemma. You ever had the dilemma? The dilemma is when you got the angel on one shoulder and the devil on the other. And part of you is going, yeah. No. That's the dilemma, isn't it? You guys all know what I'm talking about, don't you? And so there I am. So you know what I did? I did nothing. I sat there and I watched all these people get up and go to the back table and sign up and everything. And I did nothing. I waited till everybody left. And then I went to the back table. And when I went back there, I said, you know, I would really like to sign up for this, and $4,000, that's more than I make 2 months teaching salary and everything. That's a lot of money. But you said you could take credit cards. Can you take 2 credit cards? Like, could you put $2,000 on one and $2,000 on another one? And they said, yeah, no problem. So I reached into my pocket and I pulled out my wallet and I had my credit cards to about right there. And this happened so fast, it's a blur. All of a sudden, those credit cards, they took those credit cards, bam, whoosh, like that, and I was $4,000 in debt. Bingo. And that's how I got started. How'd you get started? That's what happened to me, folks, and here I am. You know, the good news though, is I did exactly what they taught me to do. I did exactly. I went home and I opened up a brokerage account, www.charlesschwab.com. Okay? I took that $1,500 it took me 37 years to accumulate, and I put it in that brokerage account. And I started doing everything like they said. I was a really good student. And by the end of the year, that $1,500 turned into $250,000. Was that a good decision? Was I scared? Yeah, I was scared to death. But guess what? Sometimes you need to feel the fear, but do it anyway. Because if you don't do it anyway, nothing's going to happen. Nothing's going to change. Well, 6th grade school teachers, you guys, really know nothing about taxes, let alone quarterly estimated taxes. So here I am, 37 years old, just made $250,000 in the stock market, was able to retire, okay, and I didn't pay any taxes. Nobody told me I had to. I mean, how are you supposed to know what you don't know? I never knew. And besides, when I was a school teacher, every time I got my paycheck from the school district, they just gave me my paycheck. And they already took the taxes out of it. I never had to write a check to the IRS. That never happened in my life. And so why should I change now? Right? And so I had no idea. Bottom line, I didn't pay any in taxes. So it was April 11th, 1999. When are your 1998 taxes due? April 15th of 99. This is April 11th of 99. I started having financial stress again. This time it was a little bit different. It's, I think I'm going to jail. You guys, I have never had a tax problem in my life. I've always had an income problem. Now all of a sudden, I don't have an income problem. I got a tax problem. No matter what you do, you're going to have a problem. And so I'm thinking to myself, you know, I think I owe taxes. I don't have any records of anything. I didn't keep any receipts of anything. I did a real estate deal, made $250,000 in the stock market. I quit my job. And now what? You want to know what you do? I'll tell you exactly what you do. You call your dad. That's what you do. So my mom and dad, they live in Arizona half the year, and they live up in Seattle half the year. Wherever the sun goes, they go. So this happened to be April 11th, 1999, and they're down in Arizona. So I get on the phone and I call my dad. He says, Pat, it's so funny that you called. He said, your mom and I were just talking about you. You know, we are so proud of you, son. You're 37 years old. You've been able to retire. And, you know, you did a real estate deal. You did all these things in the stock market. And you made all this money. That is so good. You know, it's so funny that you called me. You're just saying all that stuff. Hey, what can I do for you? I said, Dad, I think I'm going to go to jail. You know what Dad said? Here, talk to your mom. So all of a sudden, I'm talking to my mom. And my mom said, honey, what you need to do is you need some professional help. You need to go talk to our accountant, okay? And my mom and dad's accountant, great man, phenomenal guy. His name's Joe Doria. He's in Tacoma. And so I got Joe Doria's phone number from my mom, get off the phone with my mom, and I called Joe Doria on the phone. It's still April 11th. I called Joe Doria, set an appointment. I was in Joe Doria's office at 2 o'clock that afternoon. And while I was in his office, he's sitting behind his big desk with his computer and everything, and I'm explaining the whole situation, everything that happened, and he's typing things in his computer, and I keep talking, and he keeps typing, and by the time an hour and 15 minutes went by, it's time to conclude the meeting. He says, Pat, you're not going to go to jail. We're going to file an extension for you. I said, what's that? He says, that gives you until August 15th to do your tax return. Now when you file an extension, you have until October 15th. Back then it was August, okay? And he said, that gives you until August 15th. I said, but I don't have any records. I have nothing. He said, that's okay, as long as you're honest. And you have to be honest. The IRS will actually allow you to recreate your records. What about the people with Hurricane Sandy? You think some people might have lost some financial records, yes or no? Of course. Things happen, you guys. Things happen in life, not just natural disasters, but the dog ate the homework, or you go through a divorce, or there's all kinds of things that can happen. You know, people lose their record sometimes. The IRS, they just want you to do what's right. They want you to be honest and do what's accurate and what's right. That's the name of the game. So I'm sitting in Joe Doria's office. He says, we're going to recreate all your records. Here's how we're going to do it. Everything's good. I said, wow, that's great. I'm not going to jail. He said, nope, you're not going to jail. I get up to leave. He says, Pat, before you leave, get out your checkbook. I said, how much do I owe you, Mr. Doria? He said, oh, no, I'm going to bill you at the end. I said, what do I need my checkbook for? He says, because you need to write a check to the IRS. You just told me we filed an extension. I have until August. He said, that's to do the paperwork. You still have to pay them by April 15th, and it's April 11th. Get out your checkbook. I said, how much do I owe? He said, well, according to my calculations, $20,000. I said, $20,000? I need to write a check for $20,000? That's the biggest check I ever wrote in my life up till that point in time. And I said, $20,000. So I wrote a check for $20,000 to the IRS. As I'm wiping the tear from my eye, he says, now you get to write another one for $42,000. Now that one's the biggest one I ever wrote up until that point in time in my life. I said, why do I have to write another one? He said, because you have 2 tax returns that are due. Because what happened, ladies and gentlemen, is when I went to this Stock Market Institute of Learning class, one of the things that they offered were follow-up classes. I went to a follow-up class. It was 4 hours, not 3 days. And it was on asset protection for 4 hours. Could you imagine cramming everything in 3 days into 4 hours? Basically, in this 4 hours, there was an attorney that got up on stage and said, everybody in here, y'all need a Nevada corporation. We do Nevada corporations. Get out your checkbook. It's $1,200 and we'll do a Nevada corporation for you. That was the seminar. Okay? Well, it sounded good to me, so I got a Nevada corporation. So all this money that I made was in a Nevada corporation. You guys are getting 10 times the education I ever had. 10 times. It's amazing what these people have put on for you. It's incredible. Do you guys like it, by the way? Yeah, it's huge. I wish that I would have had something like this back then. So anyway, I got this Nevada corporation. All the money that I made in the stock market and everything was in the Nevada corporation. From the Nevada corporation, I paid myself about $80,000 because I still had to pay myself. I was only making $2,000 a month as a school teacher, about $24,000 a year take-home pay, and now I'm paying myself $80,000 a year. I thought I deserved a raise. Don't you guys think so? Yeah, of course. When you're writing the checks, you can give yourself a raise. It's a great concept. And so I paid myself about $80,000, and so that $20,000 that I owed in tax was on that $80,000 of income. The $41,000 or $42,000 that I paid in tax, okay, that second check I had to write, that was for my Nevada corporation. That's what happened. So let me show you something here. Here's my 1998 personal tax return. On here it shows $82,538. That's how much I paid myself. Okay? Right there, there's the check for $20,000 that I wrote when I was in Joe Doria's office. That's where it showed up on the tax return. Of that $20,000, I ended up getting a refund. Excuse me, a refund of about $5,000. So rounding it off a little bit, I'm into the IRS about $15,000 on my personal tax return. Do you guys all see that? Here's how it works. Here's your income. Here's your tax deductions. Subtract your tax deductions from your income. Whatever's left over, that's what you pay tax on. Guys, that's it in a nutshell. You know that Congress passes the tax laws? The IRS, they don't pass the laws. Congress does. There is over 76,000 pages of tax law and supporting documents that explain that. Here's your income. Here's your tax deductions. Subtract your tax deductions from your income. Whatever's left over, that's what you pay tax on. How in the world do you write 76,000 pages explaining that? That's why the tax system is so messed up in America. And if you think it's messy now, give it about a month and a half. Who knows what's going to happen, okay? So that's what that is. So anyway, I got a $5,000 refund. I'm into the IRS $15,000. Congress passed another law that's pretty cool. And basically what it says is any tax returns that you have filed over the last 3 years, you can go back in and reclaim deductions that you might have missed. And the IRS is required by law to refund your money with interest. Has anybody in this room done that? Raise your hand. A few of you have. Did the IRS send you a check back? Yes or no? Yeah, and they include interest on it also, don't they? I mean, it's pretty amazing, okay? So that's a law. So as I go through and talk to you guys, I haven't even started teaching you anything yet, but I'm going to. But as I go through and start teaching you some of these strategies, think in your mind over the last 3 years, 4 years, excuse me. You can go back over the last 3 years and any tax returns that you have filed over the last 3 years, you can amend. That means you can actually go back 4 years in time. Because don't you have to wait until the end of the year before you file that tax return? So if you go back 3 years in time, the tax return that you filed 3 years ago was for what? 4 years ago. You guys with me on that? Yeah. So you can actually go back 4 years in time on this. 4 years. So as I'm teaching you some of these strategies, think in your mind, hey, within the last 4 years, that applied to me 87 times. And you can actually go back and reclaim your money, and I'm going to show everyone, one of the last things I'm going to show you today is I'm going to show you guys how you can do that. So don't go anywhere. All right? Sometimes it's not what you know, but who you know that makes a difference in your life. I left Joe Doria's office $62,000 lighter. Okay? As I walked out of his office, I got on the phone and I called my good friend Stan Barker. Stan's an amazing individual. He's owned several businesses. He's made millions and millions of dollars with all of them. Anything that he touches, it turns to gold. And he's kind of taken me under his wing and helped me out in life a little bit. Almost like a second father almost. And so what I did is I called Stan on the phone. It's still April 11th. It's a long day. Okay? So I call Stan on the phone and I tell Stan, I just paid the IRS $62,000. That's more money than I used to make working almost 3 years full time. You know? And he said, meet me at Starbucks. So I met him at Starbucks. And I was kind of explaining to her, I said, what do I do? He said, I'm going to give you the phone number to somebody and you're going to call them. And this somebody that he gave me the phone number of was a gentleman by the name of Scott Estell. You ever heard of him? Yeah. And so Scott's in Colorado, I'm in Seattle. I call Scott on the phone. And I say, Scott, my name is Pat James. I'm a good friend of Stan Barker's. I just paid $62,000 to the IRS. And I went on and on and on and on for about an hour. At the end of an hour, Scott said, Pat, you have way overpaid your taxes. I said, I knew it. I said, I need to fire Joe Doria, don't I? He said, no, Joe Doria probably did a perfect job. I bet, in fact, I don't think Joe Doria made one single mistake. I said, well, then how could I overpay my taxes? He said, because you gave Joe Doria all the wrong information, Pat. It's your fault. Oh, well, how do you know what information to give him? Isn't that the question of the day? You guys, really and truly, if you go to an accountant, a CPA, a professional tax preparer, and that's what you all want to do, you don't want to do your own taxes. Because if you make a mistake on your own taxes, that could be considered tax fraud. You got to be really careful with that. Okay? Let somebody else do your taxes. Pay the professionals to do it. But if you use somebody else to do your taxes, most tax preparers, and there's a huge difference between tax planning and tax preparation. There's a huge difference between the two. Don't confuse them. Most tax preparers use the same kind of software. There's only a few companies out there that make this software for professional tax preparers. And, you know, it could be $25,000 a year for this software or whatever. And so you give them your stuff. And it's illegal, it's against the law for them to change or alter the stuff that you give them. They can't go in and change the stuff around. They can't do that. They have to take what you give them. They take it and they input it in the software. And in 40 minutes, bingo, spits out your tax return. That's how 99% of the tax preparers in the country do it. And then they're going to charge you the $800 for doing your tax return. That's it. Okay? You know what makes all the difference in the world? The information you give them. Give them different information, and guess what's going to happen? Different bottom line, a different result, no question about it. So that's what it is. So I'm talking with Scott on the phone, and Scott said, Pat, it's your fault. You gave your tax preparer, Joe Doria, you gave him all the wrong information. And I said, well, can you help me? He said, yeah, I can help you. What do you think my very next question is? Cha-ching, cha-ching, baby. How much are you going to ding me for? You know, I didn't say it like that. But I said, well, Mr. Estel, how much would you charge? He says, Pat, I charge a $4,000 retainer, and then I'm going to charge you $400 an hour. I'm the #1 tax attorney in the country, and those are my rates. And I said, no, thank you, Mr. Estel. I said, I really appreciate talking with you, but I'm not going to give you a blank check. I don't know if you're talking about 5 hours or 500 hours, and I'm not going to pay $400 an hour for something I don't know anything about. I said, is there any way you can give me just a flat rate? Just a flat rate. And he said, you're a good friend of Stan Barker's, right? I said, yeah, real good friend. He said, Stan's a good friend of mine also. Tell you what we'll do. How about if I just give you a flat rate, you pay my retainer, $4,000, it was actually $3,995, okay? How about if you just pay my retainer of the $4,000 and I'll help you out with all of this stuff and I won't charge you anything hourly, nothing. I said, okay, maybe. Got one more question for you. Can you save me more than what I pay you? Because that's the bottom line. That's the question you need to ask. Can you save me more than what I pay you? He said, Pat, based off of what you've told me over the last hour or so, I can save you tens of thousands. I said, tens like plural? He said, yeah, like plural. I said, so let me get this right. I can pay you $4,000 and you can save me $20,000. Is that right? He said, yep, that's correct. So should I hire him, yes or no? I did, and that's how my relationship started with Scott Estel, folks. Okay, Scott, he looks familiar. He was here yesterday talking to you guys. Amazing, amazing, amazing guy, all right? With Scott's help, here's what happened. Let me show you some tax returns. This is 1999, the very next year. I paid myself just about $80,000 again. Remember the previous year I paid myself about $80,000? This year, paid myself about $80,000 again. You know what the difference is, though? This year, I learned how to categorize all my expenses the right way, and so I could capture more tax deductions. Here's your income. Here's your tax deductions. What happens if you increase your tax deductions? Subtract your tax deductions from your income, and you only pay tax on what's left over. That's the deal. When you learn, and nobody's going to do this for you, don't expect your accountant or CPA or anybody else to do this for you. That's like saying, well, my dentist, he brushes and flosses my teeth for me. You do it. It's a do-it-to-yourself project, okay? When you learn how to categorize your expenses the right way, you will pay what you legally owe. Taxes due, $19. If that doesn't get you fired up, you got wet wood. Do you guys like that? That's what I'm going to teach you how to do. Okay? So, I got a couple more tax returns I'm going to show you real quick, and then I'm going to give you the opportunity to leave. Here's my 2008 personal tax return. $101,377. I do not want to make more money than that. Don't want it. Do you want to know how come I don't want to make more money than that? Because something kicks in called the AMT. Stands for the Alternative Minimum Tax. How many people have ever heard of that? Anybody? It is a bad, bad, bad thing. Okay? It hasn't changed. They started this back about 65 years ago or something like that. And back then, if somebody made $100,000, that's like somebody making $2 $2 million today or something, okay? It's never been adjusted for inflation, and it's a bad thing, because here's what it says in a nutshell. It's a lot more complicated than this, but in a nutshell, here's what it is. Once you make about $100,000, it's on a sliding scale. It depends on if you're married or single. There's a lot of variables in it. But once you start making about $100,000, they start taking away your tax deductions. Even if you have them, you can't use them. So you know what that means? You're going to be paying the maximum amount, even if you have the write-offs. It's called the AMT. So I don't want to make more than $100,000. That's where entities come into play. So I have different LLCs and stuff like that. I'm going to show that to you in a second. So bottom line is, my personal tax return, $101,000. I need some tax deductions, right? Do you really think I have $101,000 of tax write-offs? No. Okay? I don't quite have $101,000. I have about $90,000. But not $101,000. I had enough tax deductions because I know how to categorize my expenses and do things the right way. I have enough tax deductions, folks, where my taxable income came down to $9,350. On $9,350, my tax that I owe is $938. Now there is a huge difference between a tax deduction and a tax credit. Big difference. A tax deduction just lowers what your taxable income is. A tax credit gets subtracted off of what you owe in taxes. So if I owe $938 in taxes, and because I have some kids, I get this child tax credit thing, guess what? The child tax credit was good for up to $1,000. That gets subtracted off of what I owe in taxes. How much do I owe in tax? $938. How much of that $1,000 tax credit do I need to use? $938. Taxes due? $0. And how much income did I have? $101,000. That's not too shabby, is it? Not too shabby. It's all about how you categorize your expenses and how you structure things. I didn't know any of this. You guys, I'm a former 6th grade school teacher. You kidding me? It's not about what I know. It's all about who I know. I met some people that helped me out. Here's my 1999 business tax return. Remember I told you guys I had a Nevada corporation? The name of my Nevada corporation, because you can't see that in the back there, but it's called PJ Financial. Why do you think it was called PJ Financial? Patrick James, it's my initials, okay? So Patrick James. This was the year that I met Scott, and Scott helped me. I made just under $250,000. Taxes due, $3,500. Any of you out here, and I'm sure there's a bunch of you, that make that much money. If you're making about $250,000 a year, I can almost guarantee that you're paying probably about $65,000 to $70,000 in federal and state income tax. Why? Because nobody showed you anything different. That's why. It's not your fault. That's why you're here, I hope. Okay? I can show you how to do that. Why? Because I've done it. And I'm not here to talk about theory. I'm here to talk about what? Reality. Here's a more recent one. Some of you are thinking, well, yeah, Pat, that was so long ago. Why don't you show us something more recent? Here's one. My income, this is a 2008. This is my corporate tax return. This is a business return. $905,953. Okay? And then that was my 2008 tax return right there. Taxes due, $1,700. Okay, here's another one. Here's another business tax return. Total income, $1.2 million. It keeps getting better every year. You guys, the only difference between where I am income-wise and where some of you guys are right now is that I got started just a couple years before you. That's the difference. I sat exactly where you're sitting. I sat there. And I've been to the seminars. And I'm a student of it all. Been there, done that. All right? So this one, $1.2 million. Tax due, $0. Wow, how did you do that? Well, that's misleading, okay? Because there's actually about $300,000 worth of tax due on that. They zeroed it out for me. The way they did that, there's two different accounting methods. All right? And the way that I was structured and the way that I was set up might be different than the way you are, I don't know. But the way that I was set up, folks, the two accounting methods, there's actual and accrual. With the actual accounting method, when you earn the money, when you get your paycheck, you pay the taxes on it. When you pay the expense, if it's tax deductible, you get the tax deduction. That's the actual way. Okay? The accrual way, let's say, for example, that you own a restaurant and it's December 25th of 2012. And you decide, hey, we're going to throw a big New Year's Eve party at the restaurant. So you call all your vendors and you order the steak and lobster and you order the champagne and you order the little party hats and the little whistle things and all. You order all that stuff for your restaurant. And you throw this great big huge party for New Year's Eve. It's a huge success. Then on January 10th of 2013, you get the bill for all that stuff that you ordered. Is that tax deductible on your 2012 taxes when you ordered it? Or is it tax deductible on your 2013 taxes when you paid it? It kind of depends. Are you on the actual or the accrual? If you're on the accrual method, it's when you incurred the expense. It would be tax deductible in 2013. Here's what happened. And this was unbeknownst to me. I didn't even know about this, okay? But here's all I saw was the bottom line, and I was excited. What happened was the company owed me about $300,000. Well, the company had about a $300,000 profit, okay? Then the company owed that money to me. The company was on the accrual method. If the company's on the accrual method, it gets the tax deduction when it owes the money. Is that correct? So if it had a $300,000 profit, but it owes me the $300,000, guess what that does to the taxes? It zeroes them out. But guess what? Me personally, I am on the actual method. So I only have to declare it as income when I receive it. Have I received it yet? No. Wow, that's kind of cool. You mean the company can owe you money and it gets the tax write-off, but you don't want it, so you don't receive it, so you don't have to pay tax on it? Yeah. There's a problem with that, though. The IRS doesn't allow it. Okay? They'll allow it for a certain time, but then the time comes where you have to pay the piper. Okay? Last year in 2011, it was my turn to pay the piper. All this money, what happened was I get the letter from the IRS basically, and it says, you have all this money that's, I don't know if it was considered deferred income or whatever it was, but you have all this money that you haven't paid tax on. Your corporation says that it owes it to you. You either have to take that as income and pay tax on it, or the corporation has to pay the tax on it. Somebody has to pay the tax on it, and it's time. And I'm thinking, oh my gosh. We're talking like about $600,000 over the course of some years. It's accumulated into this. And I'm thinking, wow, I owe taxes on $600,000 because of this whole thing? That's a scary thing, you guys. Okay? It just so happens, remember, it's not what you know, it's who you know. I get a newsletter from Scott. And in this newsletter, this administration that we have in there last year, who's now going to be for the next 4 years, this administration we had in there, they passed a law. And the law says, in 2011, we're going to give you bonus depreciation. And bonus depreciation is anything that your company would normally buy that gets depreciated out. So if you buy a computer for, say, $5,000, a really, really, really nice computer for $5,000, you don't get a $5,000 tax write-off. You get to deduct $1,000 every year for 5 years. That's kind of a straight line depreciation thing. And that's how it works for the most part. So anyway, last year in 2011, they said anything that you buy that would normally be depreciated out, you can take bonus depreciation and you can write off the entire amount in 2011. So I owe $600,000 in taxes. Guess what I need? A $600,000 tax deduction. You guys with me? So I call Scott. I say, Scott, corporations buy airplanes, don't they? Well, would that qualify under this bonus depreciation thing? He said, yeah. I said, well, I don't have a pilot's license and I don't need an airplane, but what about a boat? Like a big yacht? And he said, yep, that would work also. So we found a boat. It was exactly 1 year ago. It was November last year. We found a 62-foot yacht down in Marina del Rey, California, and we bought it. Well, I didn't buy it. The corporation bought it. The corporation owns it. Okay? And it just so happens we got to write off the entire price of that boat. So guess what that did to my taxes? Woo! Yeah. I'm going to show you a picture of that in just a second. So, but anyway, that's how that one happened. Oh, let me back up here. Here's a letter that Scott got. He's an attorney, and there's attorney-client privilege. So he'll never divulge any information about anybody, any personal or corporate, or he just won't divulge any information about anybody to anybody else. All right? So the name has been blacked out on this. But this was a letter that somebody got from the IRS. And how would you like to get a notice from the IRS saying that you owe $84,123? Nice little audit notice, right? Well, this person contacted Scott. Scott went to bat for him. By the way, Scott has never lost a case with the IRS. I had breakfast with Scott this morning, and he told me that. He said, Pat, I've never lost a case. I said, wow, that's pretty impressive. But so here's one. He said, this person says, I owed the IRS $84,123.55. Thanks to Scott, after the changes, I owed nothing and received a check for $117. Let me show you what it says. Account balance before this change, $84,000. And then it says credit, 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 credit. Amount to be refunded to you, $117. How'd you like to get an audit notice saying you owe $84,000, and then by the time Scott's done with him, you get a check for $117? Do you think Scott's a good guy to know? It's not what you know, it's who you know. Okay? There's a huge difference between tax preparation and tax planning. We help you with tax planning so you can take every deduction possible. That's what Scott's program is all about. So here's what I'm going to do, you guys. Okay, I'm going to call a timeout for about 2 seconds. If anybody in here wants to learn how to do what I just showed you, stick around because that's what I'm going to teach you for the next 45 minutes.